Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and how good is your attention to detail? What bird was that? Can you name that bird? It wasn't actually a bird, it was a banana. Moving on, this is from May, as you can see, the start of May. The bots brought down Solana to a halt again, and this is the 7th time this year. Well, only a month later, Solana network has been halted globally again, so that is 8 times in 6 months, compared to Bitcoin, which has been successfully running for 99.98 blah 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 percent of its life. Bitcoin did go down for 8.5 hours in 2010, 6 hours and 20 minutes in 2013, and has since been on a near 10-year run where it has been operating perfectly and as intended the entire time. So, got this from Glassnode that the ETH staked for the ETH 2.0 contracts continue to climb. So you can see here the number of validators is just continuing to increase. Over 12.7 million ETH has been staked by 398,000 unique validators. So 10% of the circulating supply has been locked up. I'm not a big fan of proof of stake. I'm not a big fan of Ethereum, but considering that Solana is supposed to be some sort of Ethereum killer, sort of seems laughable at the moment, doesn't it? I know if I was going to be picking between the two, I definitely would be picking Ethereum over Solana personally. In other news, Oman is going to use Bitcoin and crypto mining to cut gas flaring. So if you've been watching the channel any length of time, you'll know I've often shown nothing but disregard and disrespect to the narrative that Bitcoin is bad for the environment. And this is one of the reasons, it just doesn't align with reality. If you're a producer of natural gas, then there's a big problem where you have to flare off the excess, and you can redirect this to mine Bitcoin, and therefore you don't flare the gas into the environment and you get to mine Bitcoin all at the same time. So this is just one of dozens of examples, but I'm sure we're going to continue to see Bitcoin be used to incentivize clean and renewable energy in the future. In 1970, a dollar bought you a burger. 1995, then $1 would buy you only a bag of chips. And nowadays, $1 cannot buy you a pack of gum. But people still say, no thanks, I'll pass on Bitcoin, it's too volatile for me. Currencies need to be stable. Meanwhile, in 2010, 10,000 Bitcoins bought you 2 pizzas. In 2016, 100 Bitcoins would buy you a car. These days, 10 Bitcoin will buy you a decent house. So, which would you rather hold? Looking at equities, retail has sold all of their US equity purchases from the last 2 years. And this is straight from Goldman Sachs. So, you can see here that retail is gone. Any stocks that they bought and held at any point over the last couple of years, retail's left the market. Retail has completely given up, and this is not usually a sign that we're going to go much lower. This is normally a sign of bottoms, or at least local bottoms. At the same time, I got this from Jordan. It says, I don't know who needs to hear this, as balance sheet runoff, aka QT, quantitative tightening, begins tomorrow, which is today actually. But risk markets traded higher last time the QT program ran from when it started. It was the rate hike stopping that caused risk to trade higher regardless of QT. And so someone below said, can you explain this as if we are a pack of golden retrievers? And essentially this means that rate hikes / cuts is greater than quantitative tightening equals risk markets. AKA, is it priced in already? And Jordan responds with, when the Fed stops rate hikes, regardless of QT running, markets should run. And this is what we've kind of been saying the whole time, that it all comes down to this Fed pivot, and as soon as they decide to stop hiking rates, everything is going to run incredibly quick. And stick with me, because I'm going to show you that I think we're getting incredibly close now. It says here, this chart should make it clear why the notion of a 3.5% Fed funds rate is entirely incompatible with a soft or softish landing. The debt construct has gotten way too large. Markets cannot handle it. Neither can the economy. Hence, even lower highs with even more debt. So, are we going to make a lower high? Yes, of course. It's not a paradigm shift. We will make a lower high and we'll roll over almost certainly. The federal debt, as you can see, is skyrocketed. And this is how we know that inflation is coming. Stick with me. Stick with me. This is how we know inflation is coming. Because there's no other way to service this debt. They are starting to prep, okay? Here. The Treasury Secretary, Janet Yellen, has admitted they were wrong on inflation. They've admitted it. Okay, they are lining this up. This is just after, remember, I've showed this in the last couple of videos, that the Fed rate hike pause in September may make sense. This is from the Fed's Bostic. Okay, so remember, they're already laying the groundworks for this. They're saying they were wrong about inflation. Inflation is a problem, and they might have to stop hiking the rates. At the same time, show me the charts, and I'll tell you the news. All of these charts, I'm not saying they're about to break out. This is going to need the news to catalyze it, but all of these charts are seemingly aligning for a worldwide synchronized bullish breakout. It doesn't mean to say it's going to happen now. It could easily roll over and move, but ultimately the stars are aligning. We've got them admitting inflation's not going away. We've got them admitting they're going to have to pause rate hikes and pivot more dovish. And at the same time, the charts are telling us that we are getting closer and closer, as I've been saying for weeks on this channel. So a couple more pieces and then we'll get into the charts. Bitcoin balance on exchanges hasn't been this low since 2018, and this is bullish. Bitcoin 2x's every year, so ignore the price bubbles. 100k before 2025, and I think this is very conservative. You can see that $50, $100, $200, $400, all the way up to where we are now, 25.6. So in a couple more years, the new floor should be 51.2, and then by 2025, before 2025, we should be over 100k. But of course, if you look at the floor here at 12k, we went almost 5-6 times above this. So 5-6 times above this, I think there's more than on the table. Futures for the equity markets are slightly green at the moment, so that's nice to see. And that leads us nicely into our trade portion of the video. So if you've been following us on this, you'll know we lined this up long and strong, sitting here, letting the stop do the worrying, knowing we're going to meet overhead resistance soon. So big level here. If we can crack this, this becomes the absolutely big level. And of course, we're probably going to get some level of reaction off here, and I would think off of this one too. But this is, the stars are sort of aligning for maybe a run up to this upper level, and then a rollover, and then a pivot, and we can go. So that's getting a bit ahead of ourselves. For now, long and strong. This is, as I've said a dozen times, going to be big overhead resistance, and if we can break this, then we look to the second line. Gold is holding up okay, isn't it? Not too bad. Back in this level, we violated this trend line, but we've recovered it since back tested it, and now we appear to be moving up. So like I've said a dozen times, as long as we're in here, I'm happy, and we'll wait for a move hopefully to this where we can line up a big long. If you've been watching the channel, you'll know we lined this trade up as well. We are long and strong silver, full exposure, aiming up here. Can we get it? I don't know, but not much I can do. In the meantime, as a swing trader, I just have to take the position and then let the stop do the worrying. I've had a busy week this week, but it's been good. I don't have to stare at the charts all day, every day, which is nice. Haven't looked at the miners in a while. I'm not really interested in the miners, to be honest, until gold can break this. Once gold can break this, then that brings, for me, the high betas back into play, but I'm not really interested in them at the moment. Bitcoin is doing interesting things, isn't it? We had this sort of false dawn. You could make an argument. There's a couple of arguments to make here. You could make an argument that, one, we are just net sideways in this green box. We haven't really done anything. You could also make the argument that this was a breakout, and now we are back testing this sort of top of the bear flag, or this little pennant thing we've got going on. So is that what's happened? Have we broken out, retested it? Was this just a classic Bitcoin bar pattern manipulation? Quite possibly. But if we put this fractal above it, you know, we're well within this sort of sideways thing. Are we going to now get this bull trap for real, where we sort of break out and fail? Is it just going to break out, or have we got to maybe trap some bulls first? I think what everyone's worried about is that we might be about to do something like this. If I can get this one out of the way. I think this is what people might be worried about, that we might be about to do something like this. I am not a believer. I mean, everything's on the table, right? Everything, but I just don't think so. I just don't see this as the most likely. I see this as much more likely than that, and I would even favor a real breakout here over that big sort of plunge down to 15k. I just believe there's too many big players in the market that don't want the price down there. I don't think they want people to be able to accumulate a whole Bitcoin at this point. So I don't know. We'll see. We'll see. But the on-chain data looks okay. But as ever, we'll have to take it one day at a time. Become interested in big longs above a breakout of this trend line. Although to be honest, I don't think that's going to happen for a little while yet. But we'll see. We will see. Got to take a quick look at the dollar. I said we might get a bounce and probably hopefully get a lower high. I feel like it was inevitable. We're going to get some kind of bounce out of here. So wouldn't it be super bullish for risk assets and bearish for the dollar if it just gets rejected straight away off this trend line? Of course, zooming out, this is what this trend line is. So we would have had a fake out, collapse underneath, then retest it as resistance before breaking down and violating our parabolic uptrend. Wouldn't that be a nice look? But as ever, we'll see how it goes. Probably are going to get some sort of move up to at least here. Could double top, could even make a higher high. But I do think whenever this comes, I do think that we're going to get a Fed pivot. Whether that's full pivot or just dovish remains to be seen. But I think that's what's going to catalyze the true breakdown. So 10-year yields are breaking out. But again, can we form a lower high here? Because that would be massive. So a lot to keep an eye on. No doubt about that, and we will continue to keep an eye on it. So make sure you're subscribed, turn your notifications on if you want to follow me through this and see how I deal with these crazy markets in real time. If you're not following me on Twitter, please could you go and do that? I'd appreciate that a lot. Drop a like on the video, help the algorithm, and in the meantime, look after yourself, take care, all the best.